We are talking tokens. We are talking blockchain, digital assets, investment banking, blockchain equities, real estate debt. Oh, it's always a wonderful day to talk tokens. Always a wonderful day to talk about securities for specifically. Um, and today we do have a wonderful person to be speaking with about this. If you've listened to our Twitter Spaces in the past, you'll know who he is, Julian Kwan. He is the CEO of IX Swap, as well as a lot of other things in the industry. He's been a stalwart in the security token space, leading everything going on in the APAC region with respect to security tokenization and a whole lot of other things. We're really going to be diving into a lot today, talking about the market, talking about what's going on in the space, how we're seeing developments happen, as well as potentially the impacts of the greater economy on this specific industry. But before we get into it, my name is Kyle Somlin. I am the CEO of Security Token Market, stm.co, if you've never been to our website. And basically, we're the Bloomberg of security tokens. So what that means is that we work with a lot of the different brokers and exchanges that track what these brokers and exchanges are doing with respect to their listed tokens. And these are not just cryptos. These are not stable coins. These are not DAOs. These are not NFTs. Well, they could be NFTs, but really what we're talking about here is ownership in real assets around the world, something that's a fractional share of an investment. And we are really focused on what we see as the maturation, the development of the blockchain and token game is adding real world assets, adding value to this ecosystem. I want to shout out Jackson Blau, who has organized and put together this Twitter Spaces. Also, major shout out to Jason Barraza, who's here in the audience, for helping me organize everything here, getting everything together. These guys are unbelievable rock stars. Would love to hear from them later today. Maybe we can get Jason up here onto the stage as well, if he has any thoughts later in the episode or in the conversation here. But as to the title of what you can see here, this is the featured community member series. This is where we try to highlight some of the biggest and brightest names in this industry to try to give a little bit more exposure to some of the leaders in the industry. You may know Julian Kwan. He actually competed for the heavyweight belt in the Battle of the Blockchains, which was a different Twitter Spaces series we like to do, where we put two industry titans against each other and have them debate and let the community choose who wins. We had over 100 votes in our heavyweight battle from two decentralized exchanges, IX Swap and DS Swap, one of our favorite community members as well. Julian, thank you so much for being here. Really appreciate it. And I'd love to give you an opportunity to introduce yourself to the audience.
Hey, Cal, how you doing?
I'm doing great, man. Doing great. It's 9 a.m. here in sunny Miami, Florida. Cannot complain.
Yeah, nice. Thanks for hosting us, and Jackson for helping put it all together. Always good to touch base with you guys. You're super active in the space, and always doing a lot of interesting things. Thanks for having me on again. As I think you mentioned before, we were in one of the battles, the Twitter battles before, which was a lot of fun. And hopefully, the audience learned a few different things. My name's Julian. I'm based out of Singapore. I'm calling you from Singapore tonight. It's 10 o'clock on Thursday night. We're a couple of half a day ahead of you guys.
Thanks for joining us. I know it's late for you, but
yeah, no problem. I've been setting up startups for my whole life. I'm now just over 40, so I've been in Asia, Shanghai and Beijing, and Singapore now for the last 9 years, and basically wanted to set up one of the first online investment platforms. So I moved from China to Singapore, and because they were very pro kind of online investments, P2P, crowdfunding, that kind of space. So I moved here because I thought, you need a license for this kind of stuff, and these guys looked like they'd support it. So that was back in 2015, and then when the ICO boom hit in 2017, I realized that the technology stack in blockchain is far superior to kind of the Web 2 version of online investment platforms, where a lot of that was really marketing, and then you're still investing into assets, but you're still signing pieces of paper, and a lot of the back engine room hadn't really changed at all. They had DocuSign maybe, but so anyway, long story short, which brought us all the way to today was that period of time. Super bullish on security tokens, super bullish on the future for that kind of industry. Let's build some infrastructure that everybody needs to help them issue, trade, or custodize security tokens in a blockchain-enabled and legal compliant way. So that's been the mission. We actually haven't announced it publicly yet, but we just received our exchange license here. So we've got one of the first blockchain, security token exchange licenses in Singapore, which has taken nearly 4 years.
Wow.
But we've got it, and that's fantastic. So we can see pave the way for access to all these security token trading for all investors as we kind of build this out. And as you said, the last time we were here was talking about IXSwap. IXSwap's the first automated market maker for security tokens, where just like Uniswap, anyone with a security token can come to the platform and start a liquidity pool, which is one of the main kind of missing pieces in the security token space. So that's what we're about. We're super pro, all digital assets. We're specifically focused on this space. IXSwap is one of the most interesting, innovative platforms I've ever worked on, and I think it brings a really interesting value proposition to the marketplace. But the last thing I'd say is that the world of security tokens have been predominantly focused on liquidity for liquid assets, but I think there's two major areas of focus that aren't really talked about that often, and that are missing from the discussion. And the first one is that if you take a quick snapshot of the kind of the history of the capital markets, all these transformational shifts in growth and value came when we put new technology into that marketplace, whether it was ETFs or electronic trading or stock exchanges. So the same thing happening now. We're using smart contracts and security tokens, using like technology-driven investment vehicles. So when you start talking about real-world assets and security tokens, and the real-world asset terminology has come out recently, I guess it's starting to gain more ground, but it's the same meaning, I guess, as security tokens. But when you start thinking about this, you start thinking we're going to have programmable debt and programmable equity, like entire new ways of issuing investments and holding those investments, and that's going to be enormous. Dicing and slicing and changing the way that maybe an equity investment can be done into maybe 4 or 5 different other ways is something that we're really focused on, and I think that's going to be one of the huge value propositions that comes out in the space. And the second one was, again, I think usability of assets. So if first of all we were saying take a paper share of an asset, which you can't really do anything with, of a private market asset like a startup or a real estate fund, and then tokenize it, and then you can sort of trade it and create some liquidity for it. Then you've got this next evolution of new types of debt and equity. But then the last major piece of the puzzle, I think, is when you can actually lend, borrow, stake, and actually use those DeFi services with your security token, which are actually kind of banking services originally. So that they're the kind of the areas of focus that we're looking at. And happy to be here to answer any questions or talk about anything related to what we're all kind of working on.
That's awesome. I think there's so many different directions we can take this conversation, but you piqued my interest, and I'm not going to push too hard because I want to, maybe it's a separate discussion once you're ready to go. But you mentioned you're working on some licenses and everything that goes on in your current jurisdiction is taking you 4 years. Could you just kind of give us an outline of the regulatory environment and how navigating that has been, what your journey has looked like? Because obviously we're dealing with regulated assets, we're dealing with securities, which have all kinds of regulatory complexity. Could you just kind of walk us through what that's looked like and what your journey has been like?
Sure. The journey's been long and hard. I think anytime you're trying to do something new in the regulated space, it's comes with a lot of pain. However, um, the opportunity is so big, I guess, that has still gets us sort of out of bed every day. But so this is probably the best way to frame it. I think Singapore is a great jurisdiction. They're very pro blockchain. They're pro tech. They're pro most things. They're anti retail investor trading of crypto, but they're pro every other type of blockchain asset out there, stable coins and security tokens and CBDCs and everything. But the point I'm trying to make is that when you come to there's two ways we should sort of address this discussion. So when you think about tokenized securities, which is what predominantly the structure is for most of the assets in the marketplace right now, where you've got a paper fund and you're tokenizing a share, but there's still a paper fund there, so tokenized securities, that requires actually zero new laws, zero amendments to the laws, to the regulations for that to be legal, at least in Singapore. Why? Because securities laws don't reference paper. So whether you issue a tokenized security or a paper security, how you issue, how you trade, who you can sell it to, what are the advertising restrictions, etc., remain exactly the same. So when I called up the Singapore regulators 4 years ago, and I should take it back a notch, we had a broker-dealer license in 2017, and then we applied for an exchange license in 2018. So this whole time, last 4 years, we've actually had the broker-dealer license for the issuance, but we haven't had the secondary trading exchange component, which we now do have. But when I called up the regulators 4 years ago and said, I want to do these security tokeny things, or tokenized securities, what do I need to do? They said, well, is it a security? And I said, yes. And they said, well, you got a license, follow your license, and hung up the phone on me. So then we embarked on the mission and went, okay, that's pretty cool. Which makes sense because, how do you just have a whole new set of regulations just because you're saying tokenized security versus paper security, right? Easy for the regulators to do nothing and just say, follow those rules. Now, around the world, that hasn't necessarily been the case. And people have been very, very confused and they've thought, oh, we need some new laws and we need this. And in that tokenized security type of asset, the answer is no, you don't, because of the fact that, again, regulations around the world do not reference paper. They just reference a security and how you issue it. Now, the second part of the story is security tokens. And when I think about security tokens, I think of a paperless-based offering, a pure blockchain native, investment structure. Now, now that arguably probably requires some regulatory change because, again, there's no piece of paper to reference anymore, which in the tokenized security world there is. I think Wyoming, at least, I think it's Wyoming, Switzerland for sure, Germany for sure. These guys have sanctioned already at a regulatory level the security token laws for their countries, saying it's totally legal to issue a security token. There will be no paper. Blockchain is the truth. Blockchain is the ledger, and that's the security token space. So just like to put that out there because there are sort of basically, from my perspective, two types of security token, like tokenized security and security token, and behind that, that's different structure, and then we go from there. But to kind of wrap it all up, we thought about doing this. It's like every asset's going to be tokenized. Why? Well, the concept of tokenization's, at least the value of digitization, more efficient, paperless sort of stuff, is pretty self-explanatory or pretty obvious to most people, whatever you're digitizing. Email versus written paper, or however you've digitized it. But from a tokenization perspective, it's like it's better for investors, it's better for issuers. There's less paperwork. It's better for governments. Like if you run a government, you run a share registry and you have 50,000 funds. If you try and find out in the old paper world who owns them and who are the shareholders, who are the directors, and you're always behind the eight ball because you're literally chasing pieces of papers around, and when you buy, people are buying, selling shares, there's like a 3-week delay, and there's lawyers, and there's all this other crap. Now, if all those shares were security tokens, the government or the corporate registry could literally open up the laptop and see instantly who owns it, who's directing it. So this for us was always going to be a given. This is a better system. Everyone's going to adopt it. Same concept, same I guess theory around central bank digital currencies, right? Like China's all over CBDCs. And that should have shown, and they've been all over it forever. Why? because it brings total transparency and control to how many dollars. They know how many dollars they've printed, but they don't know where they are. In a CBDC world, they know how many dollars they've printed, and they know exactly where they are, and they can actually go in and go burn those out of people's wallets. Different discussion. My point is, a tokenized security or security token is better for every participant in the transaction, from the legal side of things to the investor side to the asset management side. So we just thought this is a given because this is a much better way of doing things. And in the private markets, nothing has changed for like 100 years, again, up until sort of DocuSign a couple of years ago. So, from a regulatory standpoint, all the governments will support this. They've just been completely ass-backward, confused, anti-crypto. And it's taken up until last year for most people to understand the difference between cryptocurrency and tokenized securities and security tokens. Although we're using the same technology, the behind it is something that's completely different. So that journey now is you're seeing right now. Korea's now just said security tokens are on. Japan did it just sort of recently. Thailand's just said it's on. And again, it's Hong Kong has just said it's on. Like, so again, it's like if you're a regulator and you're looking around the world trying to get win business and drive more business to your country, you better get your heads around this, or all the capital and products will just flow somewhere where they can go. And then specifically because it is digitized and it's in, it's all online. You can people will set up where it's most friendly and where it just makes more sense. And so that's kind of how we've seen it and what we see happening right now.
So could you take a step back and walk us through what brought you to Singapore in 2015 to begin with? And then also the next step would just be, when did it click for you that blockchain-based assets were going to be the future? Was that always a day one thing, or was there something that caught your eye about blockchain-based securities? Because certainly if you were on the blockchain securities, the security token train in 2015, you were probably one of the first in the industry. So
yeah,
what caught your eye when you did kind of get involved?
Yeah, the reason why I wanted to set up an online investor platform in the first place, because the last 4 deals I did, I set up a real estate real estate fund and a real estate company. So I'd raise money for real estate projects. And when you set up a real estate fund, in the paper version, it's super slow, super expensive, takes forever to fundraise, everything's non-transparent, et cetera, et cetera, et cetera. It takes you ages to set it up, takes you ages to wind it down. So I was thinking for a couple of years, like, there's got to be a better way to do this. When does the internet going to run into the private markets? Like, it has to happen at some point. And then along came crowdfunding, and I was like, oh, okay, this, now 2022 doesn't sound so amazing, it's whatever, but that's actually was the most innovative thing ever in 2013-14. And the very first crowdfunding websites started, say, 10 years ago, and that was a big deal. So I was like, all right, well, I'm going to go set up one of these online platforms. You're going to have a global audience. It's online. It's going to be faster. But what happened was we realized once we set it up that the technology stack was pretty low. It was pretty basic. Behind the website, people are still signing pieces of paper, doing this and that. So when the ICO boom came, I bought, at that point in time, I was trying to get in. I was going to buy some Bitcoin like 2014, but I had a couple of friends who started Bitcoin companies, and they all failed, and they said, don't buy anything, it doesn't work. So they kind of screwed me. So I didn't buy anything. But but at the same time, when I, back in 2017, so what's this ICO thing? You buy a coin. Okay, how are you buying? You got to buy Ethereum. Let me buy Ethereum. I'll send it to myself. I was like, wow. So when my aha moment was just sending myself my first crypto, going like, this is so much better than a bank. Like, this stuff's great. And then went, well, hang on, this security token thing is really crowdfunding 2.0. This is low cost. This is distributed everywhere. Will be fast. This will be efficient. And then so we were thinking, we want to build some infrastructure. Why shouldn't you be able to take a share of a company or a fund and buy and sell it as easy as cryptocurrency or a stock on Interactive Brokers? And the answer is you should be able to, and you will be able to. But we've got this, monumental task that you and I and we're all working on to completely, build out this whole new infrastructure in parallel to the existing paper-based private markets, which will sort of stay there for a very long time, but then it'll just be a consistent growth in the security token space, I think.
So moving through, you talked about how you saw the opportunity of the fundraising, the capital formation, some of the primary origination side. Now that we move into the secondary markets, I think that right now we're tracking about 30-40 billion dollars worth of tokenized assets on the secondary market.
Okay.
What's your perspective on how liquid these assets are? Because I've seen some proponents of the industry say liquidity is coming, we just need better assets, blah 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 blah. Other people have said, we need market makers in order to actually have any liquidity, because that's the only thing that powers liquidity in the public markets, is the fact that we have these big firms that are basically just pumping the markets full of cash. And then you have kind of a third category of individual that says, you know what, these assets are ones that don't trade very often. Maybe they aren't going to be incredibly liquid, and that's not a bad thing. That's just the nature of the asset, because of the fact that people don't necessarily want to even sell it. They want to buy it and hold it for the long term. What's your perspective on those kind of economic mechanics?
Yeah, it's a good question. Well, again, so first of all, I believe in a couple of years' time, like you won't be able to set up a paper company anymore. Like you set up a new fund, you set up a new startup, the government place where it is, whatever country it is, they'll just be like, this is how you do it now. It's on a distributed ledger. Maybe it's a private chain, maybe it's a public chain, whatever, but you just won't be able to do it. So we will get to a point, I don't know, maybe 5-10 years time where everything's going to be a security token, like whether you like it or not. The second part of that would be to get more into your actual questions is, the point that I bring that up is because it's not like why should we do this or we shouldn't, it's going to be like, it has to be an either or. I'm like, it's just going to be that way. Now, up until that point, of course, it's going to be some people do, some people don't. Now, what do I think about the point of this? First of all, people are tokenizing public market assets, which are already pretty liquid. And the argument could be that, what's the point? It's already doing pretty well. However, there's insane inefficiencies behind that. You go and buy a stock on a public stock exchange, and it's like 3 or 4 days settlement before you get your money in your stock, and you never even own the stock, and all that kind of fun stuff, right? So there's still major inefficiencies. But I just got off the phone with the JP Morgan guys in Hong Kong last night, and they're doing tons of tokenization again for publicly traded equities. Why? Because they want to make different types of assets more usable. And so to your point about like, what do I think about liquidity and where it's going to go? First of all, there's an insane amount of different assets. So it's hard to just give it one simple answer. But what I do think is that everything we tokenized, everything most people want some form of tradability. And there's a reason why only 0.01% of US startups actually get onto NASDAQ. It's because they have the characteristics of exchange traded products, which essentially is they're big enough, right? They're big enough. There's enough valuation metrics. There's market makers. There's people that've invested billions of dollars. And then the reason why 99.99% of startups in America never get listed is because they don't have those characteristics. Those startups, though, would love to be in a much more efficient digitized format, as in a security token, and the ability to trade something. So they'll all sit on the OTC boards. Now, they won't be in the exchanges because market makers won't mark these assets. They're too big, they're too small, they're too strange. There's no liquidity. It's hard to value. But they'll sit there on these OTC platforms, which is way better than before, right? Because it'll be all digital boards of all these different assets. Now, to my original kind of, my previous kind of comments, if I had a share of my startup right now, I do have shares of my own startup, but I can't do anything with them. I can't do jack shit with my startup shares, and that might be the case for 5-10 years as a founder. If I had a security token, I might be able to use that to lend, borrow, stake, whatever, borrow something from someone else, because the format it was in was then digitized and in a trustworthy kind of platform, and there was valuation metrics and all these things that are going to come to the space, price oracles and all this kind of stuff. So, so many of these assets are just there's not going to be crazy liquidity. I mean, one of the reasons we built IX Swap as this automated market maker, anyone with a security token can start a liquidity pool, was because we believe because we fundamentally believe that the supermajority, 99.9% of these security tokens won't be in exchanges, but they'll want some trading. So let the guys that actually own them start the liquidity pools. So there's a lot of different sort of angles to it, but I think that, again, if you're just thinking that tokenization is liquidity for liquid assets, I think you're wrong. I think it's one component. And if you start thinking about new interesting forms of debt and equity as another value proposition, and then you start thinking about, I want to make these assets more usable, take my startup paper share in my drawer that does nothing for 10 years that right now, put that as a security token. I can put it on a platform and borrow it or use it and collateralize it, margin lend it, whatever. Then this is what's going to happen. These are all the additional value propositions that I think security tokens going to bring to the marketplace that are far more multi-dimensional than just, is this liquidity for liquid assets thing? Because as you said, there hasn't been any market makers. It's early. A lot of these assets aren't meant to be super liquid, what's the point of doing it? And the point of doing it, I think, is to those other elements of value that I think that you can get out of doing it.
Makes total sense. I want to take 1 minute and thank everybody who's tuned in here. We've got Herwig and Sam and Alec Beckman. We've got plenty of regular listeners as well. Michael, thank you for being here, and Crod and Victoria and many others. Really appreciate you being here. As you may remember, this is our featured community member series. We're joined here with Julian Kwan from IXSwap. He's an expert in tokenization, has been in this industry for quite some time, focused on the Singapore and APAC regions, but certainly has a lot of influence around the world. If you're interested in learning more about what's going on in the security token space, you can follow the Security Token Market Twitter account. You can follow Julian and IXSwap and all the other great things that he's doing with InvestaX and others. And you can also go to stm.co for more trading info on all the trading tokens that are securities. These are real world assets we're talking about. We're not talking about crypto, as well as getting all the media updates, videos, and all kinds of content around the industry. So Julian, I actually have a great thing to go here. I've got plenty of questions of my own, but we do have an audience question.
Sure.
So I want to make sure that we cover those as well. And this is a little bit outside of your region, but wanted to hear your thoughts specifically around T0. So T0 made headlines in 2022 because of the ICE investment, the Intercontinental Exchange, which owns the New York Stock Exchange. They actually put in an executive from ICE, David Goon, to be the CEO. So our audience member kind of wants to hear your thoughts on the institutional adoption of this industry. If you're hearing other rumblings of things going on in the space, and what's your perspective on them getting involved? Is it a good thing? Is it potentially not as big of a deal? Is it a bad thing? What's your perspective?
I think it's a good thing. Just like, the crypto markets will grow with institutional involvement, even for the guys that claim they hate institutions, like that volume of capital and more eyeballs is growing the space, and overall it's a good thing. I've known the T0 platform for many years. It's been very disappointing, I think, to most people. They did this insane security token offering way back in the ICO boom, where I think everyone was very confused and they thought they were sort of buying an ICO, but they were actually buying an STO. And they did this structure that was really, really clever for them, which was basically, and this is from my recollections, this goes literally back 5 years. They started raising money. It was like the Block One EOS token, but that was a different one. That was truly an ICO, where they just raised money and said, whatever we're raising is going to be worth 10% of the end game. So if we raise $1, then we're worth $10. If we raise 100 million, we're worth $1 billion. If we raise $1 billion, we're worth 10 billion. So it's an absolutely ridiculous structure for investors, because you get punished the more money that goes in, right? So they raised something like 160 million, and don't quote me on this, but it was big numbers. And then the token holders were meant to get 10% of the profits of the business. So anyway, that's just a fun fact for the team. I did fly to New York 2 or 3 times to meet the team, and every time I flew up, it was a completely different team. And, over the course of many, many years and hundreds of millions of dollars, they haven't really done much at all. I don't know the inner workings of the structure side of things, but Again, anyone who's very early on, as I say, takes arrows in the back. So they're still standing, which is, I guess, kind of impressive. But T0 aside, institutions are coming. I thought in 2017 that in 2019-20 there'd be institutional FOMO into security tokens, just like there was retail FOMO into ICOs. I was a little bit ahead of the time and a little bit too early. I think 2023 is going to be the institutional kind of stampede into the security tokens, because the asymmetrical risk of what you might miss out on is now far greater than what it takes for you to get started in terms of investing time and energy to do something. Whereas in the last couple of years, the risk of doing something like launching some kind of security token and it not working or failing or who knows, and the reputational risk was far superseded the so-called benefit at the time, which was like liquidity for liquid assets. So what's happened in the last 12 months, so last year, again, I love crypto, but last year was just the most ridiculous year in crypto since it began, with all the drama and the sagas and all the stuff that you guys know all about. What that actually has done has driven the narrative much stronger for tokenization, especially for the institutions. It was like, some of them are like, we're not into crypto, but we love blockchains, sort of that kind of narrative. So, what's happening, kind of as a snapshot in Asia, at least, is, everyone's trying to get on the bandwagon, right? So JP Morgan, Morgan Stanley, so Goldman Sachs, BlackRock, they've all got their own platforms, or they've invested heavily into security tokens. And even in Singapore now, there's about 4 or 5 security token exchanges coming out, and a lot of them are backed most of them are basically owned by banks or heavily invested by banks. And so, so what I think it means is that, crypto is retail led, and institutions come last. Securities were never going to be like that. Security tokens were never going to be like that. But actually, people thought that's how it was going to start. So in 2017, you had people shilling ICOs, and then when that started melting down at the 2018, people said, "Oh, this isn't selling. It doesn't work," and everyone sort of cottoned on to this. Is just there's a lot of bullshit here. Let's call them security tokens. But like, they are not. Forget licensing, half of them didn't even know what a broker-dealer was, and then the other half did, but tried to avoid it and did it illegally. So, you had this kind of retail-led attempt to launch an entire new kind of securities market, which is security tokens. And it needed to be institutional-led because you needed high-quality, licensed, good products to do it, and then open up to kind of the retail side. And that's now starting to happen. So if you look at the individual security token offerings that have been floating around the market for the last couple of years, you're challenged to find a lot of good quality ones. And the reason was that the infrastructure wasn't there yet. So if you're a high quality company or asset manager or fund or a company, and you want to issue your securities, or you want to issue a security token, if you go back just even 2 or 3 years, you have like a token issuance guy on the left, but he's got no licenses. You've got a broker dealer who wants to help you raise the money, but he's got no tech. You've got an exchange over here, and then you've got all these participants trying to get involved to make it happen. But then if they're not on the same protocol, then the whole thing's a complete waste of time. It's way harder than just issuing a paper security. So people went and issued paper securities. So there's been, difficult birth or just challenges with how the industries began and was born. And now, you're just seeing a lot more. You're seeing all these, banks and financial institutions are trying stuff, tokenizing bonds and this and that. And internally, you've recently seen, big groups like Hamilton Lane put tokenized funds on Securitize. We've done a token offering for Julius Baer Investment Bank recently, which is tokenizing some art for the high net worth clients, and the list goes on and on and on. So right now, it's time. It's time for these guys. It's matured. It's more obvious now that just tokenized securities or security tokens are going to be a thing, and it was just a matter of time. And now there's enough normal people doing it, and there's that the security tokens are not like crazy crypto scams. So it's a lot more normal. It's just more knowledge. So I think that it's a good thing. The securities markets are dominated by institutions. So security token market, they'll play a huge part. But then, I think there's going to be a lot of really exciting and cool things that come out for the rest of the investors, and specifically retail investors, to start accessing all these kind of private market assets that, again, were typically and traditionally for accredited investors and rich people only. So that's a bit long-winded, but they're my thoughts.
Love that. That was gold. And I think that some of those things you mentioned in the earlier piece of that diatribe may be lost to the current. I remember some of those things, but I think the general community doesn't. There was certainly plenty of pushback around a lot of the terminology used around some of those early tokens. I think that the term adjusted gross revenue was one that came under particular scrutiny, considering it sounds like it's talking about revenue. When you dive into the deep depths of their perspectives, you'll see it's not revenue, it's profits. And profits can get complicated because there's no one actually auditing their expenses. And to date, we've never seen a distribution to that token, even 5+ years later, to suggest that, well, they're not making profits, but are they making revenue? So there's a lot of interesting question marks around some of these things. But I think your point still is very valid, that institutional adoption makes a ton of sense. And we need liquidity in these markets. We need some of these bigger players to help underwrite deals, help get this market started. The analogy that I like to use sometimes is like an engine in a car, right? And sometimes you need that starter fluid, you need that initial burst of gas to get the fire, get the engine going. And without that, a cold start to the engine can be very, very difficult. I think that sometimes you may see something similar here. So really good, really, really good perspective. And I want to flick it back over to your platform now. And you're working with a really interesting model. Maybe it's a little less hype today than it was, 12 months ago, as you mentioned, during the craziness of the market cycle. But I just think it's a relatively interesting, novel concept that can be relatable for an audience that's familiar with crypto and NFTs. And that's with your FNFTs, the fractionalized shares of large NFT collections. Could you talk a little bit more about that process, what that looks like, and how you do that?
Sure. Just lastly, or just last comment on that last what you just said there. I think it was just absolutely brilliant for the guys that got away with it. Not that I support it or that I would buy it, but startups are notoriously not profitable, even the ones that are sitting on NASDAQ today. So people who bought these security tokens for a percentage of profits that you said, anyone who knows anything about business, how to calculate profit could be done in a million different ways, or how to not have a profit can be done in a million different ways as well, was just crazy. But anyway, I think moving along. Look, NFTs, I think I love NFTs. I love most of the stuff in crypto. Obviously, I hate the scams, but I love the innovation and the ideas and just what people sort of coming up with. NFTs for me are going to pop out, proliferate in all different types of industries, from sort of frequent flyer miles to whatever, Bored Ape Yacht Clubs to membership clubs to ownership of football clubs, whatever. There's two kind of simple ways I try to think about NFTs. I think clearly there are some NFTs that are not securities. Whatever what was that JPEG of the rock or whatever? I don't think anyone could sort of argue that was actually a security. However, I think that, and a lot of these projects will go to zero, just like any startups, just like any of the crypto. But there's also quite a lot of these NFT projects that are actually security tokens. They're talking about shares of dividends. They're talking about profit shares. They're actual ownership. So I don't know who was giving legal advice, but that again, so a big chunk of the NFT market are security tokens, but they're just not calling themselves security tokens yet. But when it comes to this fractionalized NFT, what we were thinking was, all right, so first of all, there'll be there'll be these higher priced, higher quality, high value type NFTs. Now, if you own one of these NFTs, it's typically pretty binary. You either own it or you don't own it. A lot of the NFT value proposition is that you're part of this crew, you're part of this particular NFT collection, and to drive more value, there's often these airdrops, or you've got to do X, Y, or Z, or prove that you own that NFT to get whatever value that organization's putting back in the pot. Well, so when we came up with the fractionalized NFT, we were like, okay, so what do we want to do here? We want to allow people that don't have hundreds of thousands of dollars to buy a Bored Ape to buy a share of a Bored Ape. Now, but we also know that the guy who owns the Bored Ape needs to be able to re-own the whole thing to be able to jump back into an airdrop or whatever. So we built a fractionalized NFT play where that's exactly what can happen. So I can bring my Bored Ape Yacht Club, I can bring it to the platform, I can tokenize a portion of it, I can sell that to other people. It would be, we can consider that a security token then, and people can buy that, and then people can trade it, right? So again, we don't have to worry if it's a security token or not because we got the license to kind of handle it. But again, we just thought this was a really exciting, innovative way to develop a structure that allows any NFT to be fractionalized, but then still be able to be used and bought back, a buyback mechanism for, I think you can pay 5% more than market rate, and the majority owner can buy everyone out within 24 hours or something like that. So that's what we've been doing, and we think that there's a long way to go for the NFT space, and the craziness that happened recently is always good, because you need these crazy moments because you need people to give a shit, and the only reason people and the one way people really give a shit is if they put money in and make money or lose a lot of money. So that's exactly what happened in the NFT space. It just went absolutely bonkers. Everyone started waking up to the fact, sure, the whole market completely fell apart, but now Starbucks launched them, and Amazon's doing them, and whatever, Porsche's doing them, and I'm just naming a few brands. Just in brackets, that's kind of the institutional guys, but they're coming out with all these cool use cases of tickets as tickets for events, and unique tickets for events and all this kind of stuff. So that's kind of how we're looking at it, and we've got a lot of other really interesting ideas around NFTs, but because the market's so crappy right now, we're not really doing. We're just icing that, but they'll come back, and hopefully we'll be able to do some fun things when that happens.
And can you talk a little bit about the adoption of that program so far? How have you seen the reception from the market?
Oh, well, we're just getting ready as we're pushing it out, and the whole market kind of melted down. The goal for us was we need to have high value NFTs to fractionalize, otherwise it's not really that interesting. And so let's just say we're ready to go when the market starts again. It hasn't been kind of adopted yet, and we're about to push, starting to push it out when the whole world fell apart back there last year.
Right, makes total sense. Yeah. And that's through, is that through IXSwap or through InvestaX?
That's through IXSwap.
Could you walk us through the difference between the two firms?
Sure.
and how they grew together or separately, yeah. and kind of how that process went?
Sure, yeah. So InvestaX is a for the American terminology, it's a broker-dealer and ATS in Singapore for security tokens. So you can issue and trade any type of security token. IXSwap was an automated market maker for security tokens, which initially didn't have licenses of its own, and it plugs into the OTC platform of InvestaX. And it also is built agnostic to all the STO platforms. So it wants to plug into Securitize, to Archax, to INX, to everyone, and provide market making solutions for the OTC listed security tokens. That being said, hopefully in the next 2 weeks, we'll be making a big announcement at IXSwap, where we've spent the last 18 months trying to get its own licenses just to make it more scalable. But it'll remain predominantly in AMM. And then hopefully, if things go well, you might start to see some retail STO offerings there. You might start to see, eventually the NFT products coming out on that. And you'll be able to choose either InvestaX for Singapore or IXSwap in another region to issue and trade security tokens. So that's kind of the connection. They were sister brother platforms, specifically set up as a separate entity, because when we set it up, no one had ever done an AMM for security tokens before, and we didn't want to negatively impact our InvestaX business, which was licensed in Singapore. But we didn't know if it was going to work, but we did it. We built it, and it worked. And now it's a standalone entity. And it works in parallel. So it provides AMM service to InvestaX, which is a big deal, because then InvestaX can say to clients, hello, you all want to do security tokens, you all want liquidity. Hey, I got these great news for you. We have liquidity solution. They're like, oh my God, great. Who is this? Which market makers want to make my security token? They've never heard of me. It's like you take a portion of your STO, you pair it up with a coin, and you can start the first liquidity pool, and you can tell all your investors that you have a liquidity solution, which no one else does. And maybe this is the only solution that there'll ever be. It's the first market maker in the security token space, the actual product. It might be the biggest, and it might be the only way that it really works in the end. But we'll see. It might be the 747 that was built 40 years ago, and up until recently was still being used because they hadn't sort of superseded the design. But so that's how it works. It's pretty exciting, and yeah, people can sign up on that. There's the first two security token pools in the history of the world were listed there: a tokenized Ferrari and a tokenized Sapphire. Small pools, but testing it out, see how it works, and we're now growing that in a B2B fashion, going around the world to all the STO platforms and wanting them to sort of use it in a SaaS type manner where they can provide the AMM services to their clients on their platform. So this year we'll hope to see a lot more growth there. It was tough because again, it was a world first, but really happy with how it went, and we're keen to see it grow.
And could you walk us through what an AMM is,
sure,
if the audience isn't familiar?
Yeah, sure. I probably said that. Yeah. So an AMM stands for Automated Market Maker. It's different. So let me put it this way: in an exchange, a traditional exchange, an ATS, or which they call in America, you have an order book and a matching engine, which makes it an exchange. So that's when you see all the different sell and buy side, pricing and orders and structures. And behind that, who's doing that? Market makers, right? That's the actual job, to go in there and buy and sell the trades and make money on the spreads and deliver liquidity, right? So what's an automated market maker? Well, to tell you how this came to being, in 2017-18, in the cryptocurrency space, the AMM model, so AMM automated market maker, this actually was developed in the cryptocurrency space. So if you go into 2017-18, in the cryptocurrency space, to simplify or make an extreme example so people can try to understand, there were 10,000 cryptocurrencies, but if you weren't the top 10, you had no liquidity solutions. So if you were the top 10, you went to Coinbase, you paid them $1 million, and they listed you, right? And that's actually what happened. There were literally 5 or 10 coins there at the beginning, but that only the biggest coins, right? And so for 9,000 or 10,000 other altcoins, there was no one wanted to list them because they weren't big enough. They didn't have market making. There was no liquidity. People couldn't understand them. So what happened was these really smart guys and girls at Uniswap came along and said, why don't we build a decentralized exchange called Uniswap, and we'll develop this system, this AMM, which basically is different from a traditional exchange with traditional market makers. We'll develop a system with smart contracts where anyone can bring their altcoin and a paired token, another token, USDT or whatever, and they can bring it to us, and through our design, they can start the first liquidity pool. And then when people come to our exchange at the Uniswap, there won't be all these different prices and order book and matching engine. I'll just hit buy ABC token and it'll just tell me the price, right? And where is that coming from? It's coming from the pool that was set up by that very first person. But it also meant that it's crowdsourced liquidity pool. So if anyone else came along who wanted to put their tokens in that liquidity pool, they could do that as well. And then as different people bought and sold those tokens, because they were using my liquidity, I got a share of the market making fees. So that's what an AMM is. And that's what it's called, and that's how it began. So then what we did at IXSwap was we said the same thing. There's going to be millions of security tokens. The top 10 are going to list on T0. Where's the rest of them going to go? Well, hopefully they can come to IXSwap, where they can start the first liquidity pool, and it's a slightly different structure, and it doesn't have order book matching engine, but there's a way to buy and sell it, and there's some form of liquidity, and anyone else who has those security tokens can also join in that pool. So I'm not sure if I explained it very well, but that's how it works.
I think you did a fantastic job walking us through that, and I think that goes really well with our conversations around liquidity and the importance of building those tools that can support that. And so looking forward, I think that you've got a whole lot going on. You've got InvestaX, which is your regulated platform that's providing the trading of these assets, providing the actual listings themselves. You've got the IXSwap platform trying to provide some market making services for the general ecosystem. Can you talk about kind of how you see the industry changing over the next couple of years? Do you see this being an industry dominated by a lot of these types of broker co-syndication networks, or how do you think that how do you see this whole thing going?
Look, at a high level, I think we've got a long way to go, but we've got this huge blue ocean kind of opportunity. I think there's going to be a lot more security token brokers. I think there's going to be a lot more security token exchanges. Over time, they'll probably consolidate at the exchange level in the trading venue. I think that platforms like IXSwap are going to bring whole new dimensions to things you can do with these security tokens, and hopefully that becomes a huge value addition to the marketplace, just like Uniswap did for the decentralized exchange cryptocurrency space, bringing a lot more assets, bringing a lot more liquidity. The technology is going to completely keep iterating all the time as well. So Uniswap has its third, fourth version of its AMM, and we built the first AMM, security token AMM. So I think that that'll keep evolving as well. So I think overall, things are just going to get better and better, and the quality of the tech's going to get better. The quality of the service providers, the rails, the infrastructure, there's just going to be more and more and more. DLA Piper is the sixth largest law firm in the world, actually is the main backer behind Toko, which is a token issuance platform that used to be in Hong Kong, moved to Dubai. But they saw the demand and thought, all right, well, if every one of our clients is going to ask us how to do legal work for security tokens, why don't we tell them and then sell them the token issuance as well. So, you're just going to see, I think, more and more and more of this going on over time. And it's just going to get better. There's going to be more assets, going to be better. I think ultimately the end game, everything's on your phone. You're buying and selling crypto, you're buying, trading for security tokens, you're trading for stocks, whatever it is. We're just going to get to a complete tokenized, digitized world for all these kind of assets. So yeah, I'm super bullish on it. I think it's still a bit of a grind out there on a daily basis, because there's so many rent seekers in the middle of the financial markets that don't need to be there, that don't want to get out of the way, because then they won't get paid anymore. But if you think about the financial markets and Wall Street and the capital markets, a super majority of companies sit there to facilitate transactions because people don't trust each other. Now, if you can use blockchain at a high level, to remove the intermediaries, to create a lot more efficiencies, that's amazing. Just problem in the capital markets is there's so many businesses that exist to stand in the middle of the way. But over time, they'll fight as long and as hard as they can to stay on, to hold on, and eventually they'll just get pushed out. And then so that battle rages between those that want to implement the tech to change the world, change the space, change the opportunities, take it all away from the super rich people at the top, and the companies that stand in the way. But there's enough people, there's enough momentum now, and there's enough support, I think, from the industry that things are going to go stronger and stronger each day. So that's kind of my take on it.
I love that. And just in the broader markets, do you think that the security token industry is going to move independently of the rest of the market because of the fact that it's still developing and has so much room to run upwards? Or do you see this as something that's going to be kind of impacted by the general market outlook for 2023?
The value of the assets being tokenized will move in the same way that the rest of the macro environment is. However, the amount of money that is invested into the industry in terms of infrastructure plays and new custody solutions, etc., I think that'll far outweigh the volume of the comparables to the macro. I think we're disconnected there because in a good way, because there's huge money in the financial markets. Tokenization is become a lot more mainstream. It's a talking point. A lot of these dinosaur financial institutions know that they're going to have to move soon, or that they're going to lose. They're just not going to be around anymore in the future. They're not going to be relevant anymore. So I think that the institutional players we talked about it before are so big and have so much money, and all their competitors are now moving in space. They're going to go do something, and what they can do with I guess, huge money for a startup, or, you know, $20-30 million check is absolutely peanuts when you start thinking that some of these guys have got, you know, State Street, Fidelity, like $4 or $5 trillion companies that are just going all in on this space now because, you know, they've just makes sense. So yeah, look, I think hopefully I'm right, and that continues, that we'll see a lot more capital flowing into the space, regardless of how shitty the rest of the world is, or how bad the kind of the macro environment is, because this is much bigger than the last 12 months and the next 12 months. It's much bigger than one cycle. I mean, this is a complete paradigm shift in how the private market's going to operate, and more people actually realize that now.
All right. So we've got about 5 minutes left in the conversation, Julian. I know it's incredibly late for you, so really appreciate you staying up with us, joining and talking with us about what's going on here in your world in the security token space. We've got a great crowd here of people listening, checking out, and I'm sure are very interested in what you're going on and talking about what you're building. Jackson, I want to kick it over to you. Do we have any other audience questions or anything else that we want to discuss before we close out this future community members conversation?
Yeah, so we had one question that we hadn't got to yet that I'd love to ask Julian. And again, I just want to thank everyone for being with us. This is a great engagement, and you, Kyle, and Julian have been doing a great job holding down the conversation. So I just want to thank both of you as well. And so, Julian, the question that hasn't been answered is relating to liquidity. When we were talking about relative to traditional markets, this was asked. So the question that was asked when we were discussing it was if we feel that security tokens relatively low liquidity right now is an issue. And so the question was, I think it's because IX Swap is building a tool specifically to help provide the liquidity, is just why is the liquidity in the security token space important? And so I'd just love to hear both of your guys' thoughts on that real quick.
I guess, why it's important. It's important if people want to sell something, right? If there's no liquidity and no buyers, you can never get out of anything. So I think, at a high level, the reason why I don't think anyone buys anything that they think they can never sell, right? Maybe some people do, but investments meant to get a return, and often the biggest return from that investment is selling the whole thing, even if you're getting dividends along the way. So I think, marketplaces, buyers, sellers, all that kind of stuff is important. Otherwise, it's very hard to kick anything off in the first place, because again, buying something that is, in brackets, guaranteed never to be able to sold again is kind of a bad investment in my mind. So that's kind of how I think, why I think the liquidity thing was such a big deal and why it stole the limelight. But I think we collectively as an industry should start focusing more on new and better investment structures, and also what we can do with our assets, and not just, this magic. Liquidity is also, there's a lot of dimensions to it, right? What asset are we talking about? Where is it being traded? Like, who can buy it? Like, how big are the investments? Does the guy even want to sell it? Like, so liquidity has been massively oversimplified in the space. It's just like, is there liquidity or not? And it's like, and then it's like, well, let's ask all the questions that I ask about that, because I could take, the building in New York and say, I could get you liquidity, essentially in 10 minutes if you sold me that for $1. Here's $1, done. But of course that's not realistic. But my point is that there's many dimensions around the concept of liquidity, but for some reason we've just taken the entire private markets of $13 trillion, talk about tokenizing it all, and just think liquidity is this one simple word that we just answer. We either have it or we don't, and I don't think it's that simple.
Yeah, I completely agree with you there, Julian. I really like the point that you made about it. It's really going to come with the assets that we're actually tokenizing and the structure behind them, because at the end of the day, the liquidity comes with the demand for the assets. Like you said, no one's buying an asset that they're hoping to hold on to forever, unless it's an asset that you're going to get dividends in perpetuity. And very few of those exist. And so, Kyle, did you have anything you wanted to add there?
Yeah, totally. The other piece that I want to jump on what Julian said is actually price discovery. the more liquid an asset is, the easier it is. Liquidity is really just defined as how quickly can you convert something into cash. So if it's liquid, that means there's a lot of people that want to buy it, a lot of people that want to sell it, which means you can pretty easily, pretty quickly convert it into cash. And what that means is that you're able to actually find what is the real price of something. If not many people are trying to buy it, you may have to sell it at a much deeper discount than what the thing is actually worth, and vice versa. There's a lot of people trying to buy and not a lot of people trying to sell. You actually don't have a great idea of what the thing is actually worth in real value because of some of those kind of more traditional supply and demand economics. So I think that the additional added benefit of enhanced liquidity is a better approximation for what an asset is actually valued at. And the important piece there is that once you have a better understanding of what an asset's valued at, you can then better apply risk factors. You can better then project what it will be worth in the future, and vice versa. Some of these more basic or rudimentary supply and demand economics things make it very difficult to evaluate what an asset might be worth in 6 months, in a year, in 3, 5 years, right? Like you look at an NFT project. How does anybody know what an NFT is going to be worth 3 years from now? It's only based off supply and demand, and it's very difficult to have any level of understanding of how that will change over time versus, when you look at other features, whether it's cash flows, that you could properly do a discounted cash flow analysis and calculate what's the present value of this asset, and then be able to properly understand what the price of something is going to be, I think, a much better and more efficient way of making investments into things, especially when you're talking about larger ticket sizes, when you're talking about big institutions, you're talking about large checks. You need to be able to understand what the asset's worth and have some level of confidence in what it may be worth in the future. I think that that's something that liquidity can add to and benefit.
It's true. Yeah, it's true.
It's a great point you made there, Kyle. And I think we're coming up on time, guys. I, again, just want to thank you, Julian, for joining us today. This conversation has been great. All of your insights have been invaluable. And I'm sure all the listeners have all taken away some nuggets, all very useful. Thank you so much for joining us. And thank you for the listeners, Undine, Drew, Michael, Emmerichs, all of you guys, Adam, Victoria, anyone that has interacted, sent a question, been here since the beginning. We really appreciate you guys. We're going to be hosting our featured community member engagements through these AMAs and articles at the beginning of every month, the first Thursday, and we're going to be having more Twitter Spaces. Hopefully Julian will be around to join us for some of those. He's always a great guest. As we said before, Julian is champion of Battle of the Dexes, where he went head-to-head against another market-making solution for security tokens and took home the heavyweight belt. And so I really just want to thank you, Julian, for participating and being a part of this community with us.
Yeah, appreciate the invite, guys. Great conversation. Anytime. I love joining, and appreciate all the work you guys are doing in the space. And yeah, thanks for everyone for joining. Hope you guys learned something. We've got a long way to go, but there's a lot of exciting stuff going on.
Beautiful. And Julian, just last thoughts. Where can everyone find you?
Yeah, I am on Twitter, but I'm pretty busy, so I don't sit there writing like too much there. You can log on to the platforms, InvestaX.io. It's all, you guys have put it all down there. The IXSwap platforms as well. I'm pretty prominent. I spend a lot of time on LinkedIn because I think that's actually the best business kind of social media. So you can find me on LinkedIn. I think I've got my actual name because I was on there kind of first. And I think if you put me down, my Twitter handle on the invites here as well. So yeah, happy to answer any questions after that. You can reach out to me, reach out to my team. We're always posting educational stuff and trying to help drive the industry forward. So thanks again for having us, and thanks for everyone who turned up.
Thank you for that, Julian. I've just moved our article to the front. If you want to find all the links to Julian, InvestaX, and IXSwap, check out the article. They're all at the bottom for you.
Yeah, great.
Have a great day, Julian,
Awesome.
and thank you for joining us, everyone.
Thank you. Cheers, Carl. Yeah, thanks.
Thank you.
Thanks.
Talk
Thank
soon,
you, guys.